What's going on, guys? I wanted to give you a video today of my favorite stock in the stock market right now, and that is Alibaba. I think it's got huge upside potential, and really there's a lot of good things going for it. And right now it's just been basically beaten down, and that presents a really good opportunity. So the first couple slides I wanted to go over here are from their 10K report, and really this first one is taken, I think, from within the first 5 slides of their 10K, and it really alludes to their long-term vision. So you see here in this top right corner, they're talking about a vision of 102 years out. So most companies that you see out there, they're looking quarter over quarter. What are their earnings? What's their revenue look like? Year over year, what's their revenue? What's their earnings look like? Alibaba is not thinking years out, they're not thinking decades out, but they're thinking over a century out. So anytime you want to find a good business, a business that'll last a long time, obviously you want their management looking at things like this, the long term. So next slide that we have here, we basically have a layout of all the businesses that Alibaba is involved in. So you have Alibaba Health, you have their grocery store business, some video businesses, AliExpress that everyone kind of knows about, as well as the normal Alibaba.com. The things that I didn't really know about is that they even have digital and media entertainment businesses, and then there's some innovation on the talk side, and then I think everyone kind of knew a little bit about Alibaba getting into the cloud space, but it's actually a bigger thing than people really think about, and they're really competing on all fronts, and they really mimic the Chinese version of Amazon. So this next slide I have here is the last one I pulled from the 10K, and it shows their year-over-year revenue growth, and basically what you're seeing here is that they are having basically incredible growth. So year-over-year from 2020 to 2021, you see the Chinese yen is basically what I'm looking at, which obviously can be converted into dollars, but for Chinese yen, you're looking at a 40% increase in revenue year over year, which is massive for any business, but especially for a business this size, you really don't see a whole lot of growth that way. And that's similar to things that you see at Amazon, and that's why there's a lot of, I guess, comparisons between the two businesses. But again, you see it basically continue to grow. So even with the pandemic and everything going on last year, they grew the year before, and then also grew last year into this year. So basically we're just seeing incredible growth that I don't foresee slowing down. With China having such a huge population, they just can keep basically growing and then expanding their audience to further reaches within China. So now let's look at some more kind of technical analysis of the stock. So what we have here is a graph of the 5-year basically daily PE ratio for BABA. So what you can see is kind of back through 2019, even through most of 2019, we were trending really high for the PE ratio. So you saw kind of numbers above 30, 36 for most of that time period. But ever since late 19 and early 2020, basically we've been trending very low for the PE ratio for Alibaba. Obviously in 2020 we had a huge bear market and everything went down, and that attributes to a lot of this. And then in late 2020, as everything kind of turned around, this was probably around the Christmas season and everything, things began to spike back up, and really what we've seen again is a drop again in the PE ratio, which generally, obviously, with PE standing for price to earnings, as the PE ratio goes down, that means the price is going down along with it. So what you've kind of seen in these two areas is very low prices compared to how much Alibaba is actually earning. Again, this was actually taken, the screenshot was taken on October 11th, so these change day to day, but for the most part we've been sitting around that 20 PE ratio for the last few weeks. So this slide here, what we have is basically the average PE ratio over that time period. So over the last 5 years, we've had an average, or Alibaba's had an average PE ratio of 38.55 with a minimum of 17 and then a maximum of 62. So around 38 basically is where we've been sitting, which for a company like Alibaba seems fairly reasonable, right? Because you'll see companies like Amazon and they'll have massive PE ratios. Facebook kind of sits relatively low for PE ratios, but in terms of a company with a lot of growth, this is overall a decent number to look at. So what we have here now is an evaluation of basically that PE ratio. So if we averaged 38.5 over the last 5 years, and right now we're at 20.25, basically we could make a prediction of where the price should be, right? So we know that the price right now is around $165. That's kind of coming over here. We've got the stock, so this is actually up to date for the 13th, and right now we're sitting at 167. So the last couple of days it's kind of been around that 165. I'll bump this up to 167 just to make it, let's actually do 168, so we're on the conservative side. So here you can see basically what I'm doing is I'm taking the price, multiplying it by what we say is the 5-year predicted PE ratio, and then dividing by our current PE ratio. And that gives us what we'd expect our price to be at. So we'd expect our price to be around $320 basically. And that presents a difference of $151, which makes a possible return if you buy at this price and were to sell at $320 of 90%. So you're looking at basically a stock that could 2x in a very short amount of time. So what I want to get into next here is basically the whole reason, right, that the stock has dropped, that we've seen this reversion back down, is fears of China and China's control over businesses, and basically how they're going to set their political position against companies such as Alibaba. And what I'd really call on there is companies looking at local companies like Facebook, right? So Facebook, you have the Federal Trade Commission basically filing lawsuits against them, and this has been going on for years, claiming that they're a monopoly. You can even see here the co-founder, basically they're openly criticizing the co-founder, Mark Zuckerberg, as an old school monopolist. So you even see the US government reaching out and basically saying that companies like Facebook are monopolies and wanting to restrict them. That's the US government that we're talking about. So why is it different for the Chinese government? Obviously, they don't really have a great track record with businesses, but you see Facebook, and in the last month, they're only down 13%, even though you have all this news going on. Where if you look at Alibaba over the last 6 months, they're down 30%, right? And as you even go further back, like I said, from their highs, they are down around 50%. So you're seeing kind of a difference, and in some cases, obviously it is warranted. There is, like I said, China doesn't have the same type of basically reputation that the US government does. The last thing I wanted to touch on here is some of the huge investors that are bullish on China or even on Alibaba itself. So Charlie Munger, you have here, obviously good friends with Warren Buffett, works at Berkshire Hathaway, and really has a great line of success. You even have an article here written about how Charlie Munger has recently doubled his position in Alibaba and sees a lot of good basically upside with the stock. So he's obviously known for his investing and understanding of the stock market, and has proven it year in and year out. And the other big investor that I would note is Ray Dalio. So Ray Dalio has spent plenty of time in China and kind of stands behind the argument that China is pro-business. So they aren't trying to hurt their businesses and basically cap businesses out where they can't grow and they can't really move forward and keep growing and earning more money. He thinks that China has basically found a good middle ground between socialism and capitalism, and that promotes growth within businesses. So those are really good points, I think, to note, because obviously you have a huge investor like Charlie Munger investing in Alibaba, and then someone who is bullish overall in China in Ray Dalio. So personally, I do own the stock. I love the stock. I built out my position over the last few weeks, and right now I'm at a kind of a comfortable spot. I'm up on my position, and I'm hoping to hold for quite a while and kind of see how everything grows. And I think really a big factor you got coming up is the holiday season, and obviously I think Alibaba will only benefit from that. So I hope you enjoyed the video. I appreciate you watching and stick around to the end. If you did like the video, please drop a like, and if you want to subscribe and want to catch all my videos, make sure to hit that red subscribe button. Thanks again.